Alright, what's going on, guys? Jeff here, back again with another video, and we're going to be talking about the FOMC meeting that just happened last night. Okay, the Fed's just made a brand new set of moves that's going to be shaping how your portfolio is going to be moving into the new year. So without further ado, let's get into this. Federal Reserve just officially cut interest rates by 25 basis points. For people who are unaware, it's 0.25% easily, okay? So this is going to be bringing the federal funds rate down to 3.75 to 4% range. So we are effectively in a rates cut cycle because this is the second time in a row consecutively where the Fed is cutting rates. Now this is where it kind of gets interesting, right? Because 30 minutes before Jerome Powell enters the stage, we have to look at the balance sheet statement that the Fed came up with. Now, the Fed basically announced that it's going to be ending its quantitative tightening program in December 1st. Now, this actually means that there's going to be no more shrinking of the balance sheet after December 1st. Instead, the Fed will start reinvesting proceeds from its mortgage-backed securities into short-term treasury bills. Now, basically, this is just swapping out your MBSs for treasury. Now, of course, they didn't explicitly say we are starting quantitative easing because that's going to be too easy. But the entire market is reading between the lines, right? They're like, oh, it's obvious, right? A lot of people were expecting quantitative tightening to happen last night, for quantitative tightening to end last night. But of course, it was known that quantitative tightening was only going to be stopping on the 1st of December. Now, this is the first step towards more liquidity in the system, especially with the MBS for treasury shift. Now, Jerome Powell wasn't exactly in a party mode either, okay? Because during the press conference, he kind of pushed back a little on the market. Okay, he stepped in, he started with his own opening statement, and he said, I think that the December rate cut is not a foregone conclusion. Now, when that happened, when those words left his mouth, the market just tanked. Okay, you can see that the Nasdaq, the S&P, all of them fell 0.5%, some even 1% because of what he just said. Now, he basically pushed back on market's optimism, saying that December rates cut is not going to be a confirmed thing. It's not guaranteed, okay? He explained that the committee is still divided. Inflation is not exactly at their comfort level, which their dual mandate required them to be at 2%. Now, they want to see how the economy handles this latest cut before acting again, which I think is normal, right? A lot of people kind of expect that. So in short, what Jerome Powell is telling you is that, hey, don't pop your champagne just yet, okay? Just hold on, wait for more data. Because right now, the problem is that things is still pretty blurry, especially with a government shutdown that's still ongoing at the moment. We do not have enough data, and especially with a divided committee, with 10 of them thinking that they should go for a 25 basis point cut, one of them being Miran hoping for a 50 basis point cut, and one of them being Schmidt wanting a rate pause. So clearly, a divided committee with persistent inflation, and now with possibly no data moving forward. Understandably, I can see why Jerome Powell is a little bit more, kind of shiver me timber kind of thing. So afterwards, he also kind of touched upon the labor market, talking about how job growth has clearly cooled off. Employment is starting to tick up at about 4.3%. Now, overall, I think the job market is still pretty solid. Jerome Powell emphasized that the US is going to be facing structural labor supply challenges, demographics, slower immigration, fewer workers entering the market, things that rates cuts will never be able to fix. It means that the Feds do not have the tools on their belt to be able to solve all this. So yeah, the Feds is just walking on a tightrope between trying to support jobs and avoiding yet another inflation wave. So what does this actually mean for you, and what does this mean for the market? So in the short term, stocks probably got a little bit of whiplash. The 25 basis point cut sounded dovish. Okay, Jerome Powell's tone was hawkish on the other hand. So this kind of sent mixed signals to yield up and stocks down, which means that if you are getting into bonds, pretty good, but stocks are suffering from this. Now, we're going to be expecting volatility as traders start to digest what this pause or pivot is going to be. Because from the statement itself, it seems that it is pretty good. We are possibly seeing a quantitative easing cycle about to happen. However, in the long term, this is going to be a little bit mixed for all of us. Now, for longer term at the moment, the end of the QT cycle, which is the quantitative tightening cycle, would remove one of the biggest liquidity headwinds. Now, it's going to be supportive for your equities and bonds, which means less draining of money from the system, which means more fuel for all your risk assets. For all these AI nerds, tech nerds, crypto nerds, you guys are going to love this. However, since Jerome Powell is just keeping the door slightly open for more cuts, do not really go ahead and go and expect this 2020 style liquidity flood, okay? We're not suddenly just cutting rates down to 0%. This is not COVID all over again, okay? So we're not going to be seeing interest rate just drop to 0%. So instead, we're going to be in this moderate growth mode, steady rate environment, especially with tech and growth names still benefiting if inflation continue to ease off. Cyclicals and defensive stocks is going to lag if the Fed stay this cautious. Bottom line, the Fed's easing the brakes but not stepping on the gas, which is what Jerome Powell was kind of talking about. It's really, really foggy. They just want to slow down a little bit to get more visibility before they continue on. So yeah, for investors, this actually means that the market can be cautiously optimistic and still data-driven, data-dependent. Keep your eyes on the next job reports and inflation data, which BLS is currently still down because of the government shutdown. We're not sure when this shutdown is going to end. Currently, the shutdown has been going on for 30 days. Now, because those will only be decided when December brings another cut or just a more uncertainty, which is why people are still being cautious. So yeah, if you're investing, just stay alert, okay? We're currently in this transitionary phase. We're not really in this full restart of easy money era just yet. But, you know, I don't want you to think that there's so much panic in the market to the point where you just don't invest in the market. But anyway, that's all I have for this update of the FOMC meeting. And I'll see you guys in the next one. Peace out. Bye.